Hey, Steve Zonard here with Treviso North Realty. Just a real quick update on the current market. Right now, inventory, we're at 30,163 units with 799 selling. And then if we shift it off into Simcoe right now we have 5,760 units with 127 selling. We've had a great couple weeks here with listings. We're selling them off, which is fantastic. We're injecting new buyers into the market. So it's kind of like a nice little ebb and flow happening that last, let's say, 45 days where it was a stagnant period. And then now we're starting to have this good little bit of progress here. And also, like, properties that have been on the market for like 90 days, we're finally getting offers. Like last night, we have a property located in Essa when we got an offer after 81 days in the market. Again, is it ideal offer? No, it's not. But it's someone that wrote their name on a piece of paper that's willing to give you money for the property. So you got to look at this in value, especially in a buyer's market where the buyer has all the power, seller has nothing. Right now, you're going to be giving concessions to make deals happen. That's just reality with the market currently going on. But what I'm looking at even with this property is an investment property. So they came in about 13% under asking, which is quite low. Clearly, they came aggressive. But at the same time, they want a deal. And, you have 25, because this one has a very active showing log. We have 25, 30 showings and no offers based on, it has a situation where there's no bathroom on the main level, so it's kind of throwing people off. So you got one person to commit. You can't take this lightly. You got to work this deal to the end, back and forth. If it's $5,000 increments, until we get to a breaking point where both parties are ready to walk away, and then we make a decision. But we can't, even as a seller, get too emotional with an offer coming in way below what they're asking, because that's the market and that's what they're going to do. But it's our job as realtors to kind of get it to a point where we're at a breaking point where, again, both parties are ready to walk away, and then we make a decision. Because, again, we're not going to sprinkle any magic dust on this. A buyer is willing to pay for a property what a buyer is willing to pay, especially in today's market. It's not like you can, there's a shortage of inventory and you have full power over this. You have a ton of inventory. So if you don't take the offer, they're going to bring that somewhere else. And to be honest, any piece of paper with a name written on it that's willing to occupy your home or take possession of it is basically a contract gilded and gold in today's society, because of obviously it's a buyer's market. So with that said, the whole goal is if we can get this to probably like 6 to 7% below asking, I think it's fair, basically, because 30 showings, 81 days in the market, and only one person's willing to write their name to paper. So we got to take that and kind of run with it. And the reality is, we're advising sellers too, like, don't get too emotional with these things. It's just brick and mortar, especially if they're investment properties. I get it if it's your primary residence, but they're investment properties. There should be no emotion attached to them. You bought them to make money. If they stop making money and they're depreciating, they're not your friend anymore. You're going to have to do something with it. So we got to look at it like, let's cash out now, take out the money, and then stick it somewhere else where the money's going to be working. So this is just logical. We shouldn't be fighting with realtors and sellers and stuff like that. This is basically what we need to do. Right now, it's a big rush to get rid of everything that you have, just based on where we're seeing the market and where it's going to be heading in the next 3 to 4 years. And what I'm telling clients, pull the money out, stick it somewhere. I don't even care. Like, even if it's got no benefit to me, like you're not bringing it across the border, stick it in a GIC. It doesn't matter. Just take it away. And in 3 to 4 years, by 2029, 2030, you should be able to buy something for a lot less. So let's just say this property depreciates a further 30%, because that's where we're heading, guys. If you look at it, so economically, it's a disaster. There's no economic growth. There's a failing economy, clearly. Immigration is down to its lowest. You got people leaving. There's the highest migration outside of Canada, and it's not people that are just sucking up the juice of the government. These are high producing people. If you see the people that we're helping across the border into the U.S., these are high income, high producing people with high assets that are moving everything out. So if I'm just a little needle in this whole aspect of everybody moving out of Canada, these are not schlebs that are moving out. This is a lot of money coming out. And then you're looking at all the builders, secretly they're moving stuff out. We got Green Park here up in Florida that's building like crazy down here. Condos and houses and stuff like that, they're moving. Mad at me, forget about it. They're all over America. They have more product in America than Canada will ever have, because they're obviously in probably like 7 to 10 states here building. So you kind of look at all these builders moving money out. Why? Because the money's got to work. It is what it is. So why, as as a small investor, we can't see that money needs to keep working. Don't keep it unemployed, keep it working. That's why cash out of these assets now and then move the money into something that's going to make sense. And if you think you're losing money right now, call me in a year from now and tell me about this. And that's what I told one of my clients yesterday. I'm like, we're going to do either one of two things. Either in 4 years, you listen to me now, and in 4 years, we're going to celebrate, let's say in 2029, or in 4 years, you didn't listen to me, and you're going to call me and tell me I was right. I don't know if you would call me at that point, but ultimately, it looks pretty grim. We have another listing coming up as well. Same theory. Last year we advised them that the market's going to fail another 20-30%. You're going to be up there. And again, I think it fell from its peak value. Probably. Well, let's see. I'm going to do some fast math. Let's just say. It's dropped 21%. 21% in a year. So 21%, look at the numbers though. This is out of your pocket. Again, we're not wealthy people, right? Like all this, it's almost $200,000 in a year. That could have been in your bank account. What could you have done extra but 200 grand? And next year is going to be less. You got to be able to get out. So there's a few things too that we're advising clients. There's obviously not everybody wants to sell and rent and do stuff like that. So we are doing a webinar. Clearly the webinar is to create value, how to take advantage of today's market. If you are looking to stay in home ownership in Canada, how you can sell your smaller home like a town or semi-detached, get into a larger product. And look at these numbers. We're going to present these at the webinar. We're thinking this Saturday, but it looks like we're probably going to do it the week after because I'm actually flying into New York on Wednesday. Which doesn't matter, could have done it at the hotel. But anyway, I think it'd be easier if we did it a week later and market it a little better. But look at this. So this is which community is this? Tottenham, okay? I think Bolton's even more shocking. Give me one sec. I love it because now all the numbers I need I can get calculated with ChatGPT on stuff I want to do. So when you become the architect and you actually have someone that actually can draw, it's beautiful. But look at this. This is I think this is Bolton. Yeah, Bolton. Look at this stretch. You want to tell me it's not a good time to upsize if you are looking to stay in the market? So if you have a town or semi, and the whole point is, what's your home worth at the height of the market? This is what we went for. So 2022, we went from Jan 22 to March 31st, 2022. So that is the highest Canadian real estate has ever performed. So we went from that, and then we went to detached. So town semis versus detached, all in 22. These are the values that we're getting. So the peak of 2022 average sales, and this was probably on 23 to 25 sales in each maybe even more. I don't even know what they were. There were whatever the sales in Bolton were. This is where we got them at. Okay, so 905,000 was the highest town and semi. Okay, highest or the average rather. This is the average price. Then you get into detached property, 1.5 million for an average detached in Bolton, Ontario, which is insanity. Okay, current market. And this is sales based on the last 90 days. I didn't want to get too much with this because if I go, you got to remember the market is depreciating, so we can't do 6 months or we can't do a year because it'll screw the numbers up. 90 days is even too much because every month we're seeing a decline in pricing. So we just did 90 days just to kind of get more numbers on the board here because these are probably, again, 20, 30 sales per group here. Look at this. 737,000 is for your town semi right now, average sales price. Okay, so it just dropped 18.6% since the height of the market. So you dropped 20%, okay, if you got a town semi detached in Bolton, if it's north, south, or west hill, okay. Detached property, average $893. You can get into a detached property right now for $893,000. It's a 40% drop off. So if you wanted to trade up from a town or semi, you have a 40% less mortgage. That's what that means. You got to look at it for the mortgage amount. Because look at this. In the peak, you're a $600,000 spreads. That meant, and I'll be the one to tell you this, I bought my house in Nobleton I sold for $9 and change. I paid $1,450. I think so. What is that? Almost $500,000 it costed me to upsize. That was the height of the market as well. I timed it quite well because we sold in February, or we bought in Feb, and then we sold in March. So I made an additional $120,000 on the sale of my house, or else it would have been $600 and something thousand spread. But it was $500,000 spread. And if you're not making high income, it's not like I paid that in cash. It was a mortgage, another $500,000 on the mortgage. So look at this now, current market. I hope this makes sense to everybody. But if you wanted to upsize in today's market, the spread is just $155K. So that would be, again, these are based on, average of all the sales in Bolton, but that's a $445,000 less mortgage. And they say that famous saying, date the rate and marry the price. Well, there's the ideal portion of that, is that your price is going to be much, much lower than, let's just say, it would have been in 2022. So this is a great time to upsize, and we're going to present this out. We're going to give 4 different examples of different areas, kind of show you the spread and how to take advantage of it. We're going to have our trusted mortgage broker on as well, Luca Quinteri, and he's going to run the numbers for you and kind of show you the difference if you had carry that mortgage in 2022, and if you carry the new mortgage at the new amount in 2025. But that's pretty much it. What we want to do is provide value for clients going forward, and this is why we are doing these Survive or Thrive webinars. Have a great day, guys.